Bollinger Bands were developed by a famous technical analyst named John Bollinger. By definition, Bollinger Bands is a technical indicator that plots lines that are calculated based on the standard deviation of a simple moving average. This is how the Bollinger Band looks. It consists of 3 lines. The middle line here is a simple 20-period moving average. The upper line is plotted based on 2 standard deviations above the 20-period moving average. Similarly, the lower line is calculated based on 2 standard deviations below the 20-period moving average. These 2 blue lines can also be called as the upper band and lower band respectively. The Bollinger Bands are very popular among traders because they help in determining whether the price is higher or lower on a relative basis. Throughout this video, we will use the Bollinger Bands on their default settings of a 20-period moving average with a 2 standard deviation. The distance of the bands is based on standard deviation and hence, they adjust to the underlying volatility of the asset.
In a sideways movement, what we can see is right here, we have the upper part of the band, which we know that this is a lot of resistance. So every time it hits here, what usually happens? All right, this traded sideways, but it had a bullet candle. Okay, so when it goes up, then we see a bigger candle, and then we have a smaller candle. What's happening? Okay, it's starting to exhaust itself, whatever these buyers are. And so what do we see? A giant red candle all the way back down to the moving average. All right, from one end to the other, from one end to the other. Sometimes they go outside the bands. Okay, but most likely, how would you know that this is going to push up? Well, again, we have a smaller band here. So when we have a bigger band, smaller band, then we're starting to get positive, right? Okay, so this is indicating that the market is starting to buy, and we can quite see that over this time period. So if you had some holding power, it would go back up to the upper band. In fact, it went above it. So, but these are and this is the midline average, as we see. So sometimes it goes up to the 20-day moving average. Some days it goes up to the +2 standard deviations above and beyond. And we could see that quite clearly. Do they drop out of here? Yeah, it does. Now look, this is a huge declining market. So we're going to see that on occasion where it does go outside the Bollinger Bands. That might actually be +3 standard deviations, which means way oversold. So what do we see? Huge buy pattern right after this. Okay. All right. So the way we can read a lot of these things is when you have huge gaps like this versus tight gaps in between, this is huge volatility. This means there's a lot of trading going on. And in this case, since we see the 20-day moving average moving downward, this is a downward slope and it's a selling or a bear market. Okay, here we're trading sideways. So in a sideways market, sometimes the Bollinger Bands hold a little bit more true. These are mostly for short-term traders, but you can look at the long-term exhaustion of some of the stocks. All right, let's go take a look and see if we can look on TradingView and actually give you some examples of how this is used. Okay, we're back to TradingView, and we're looking at what Ethereum is. Well, we did some crypto so that we could look at Bollinger Bands with this. In fact, we'll do that right now, just so you can kind of see the way it goes. So I'm going to look at Bollinger. I guess that's what they're called, Bollinger Bands. All right, let's just take the Bollinger Bands here, and let's hit escape, and let's see what we got. Now, again, this is the 21-day moving average. I know in his video it was yellow, but it doesn't really matter. So you can see when it's inclining or it's declining. Now, right here, we're having a sideways market. But what do we see? A perfect top right here where we found lots of resistance. And then we got some support around the 21-day moving average. Now, could this go back down to this -2 deviation like what we've seen here? How many times has it done that? You see a wick. These are called wicks on candles right here where it goes down. So we have 1, 2, 3. We have another wick, 4, 5. So this is a pretty strong look at this. And this is on the 1 day. So you kind of try to find your niche. And so you can see that what's happening. Okay, there was 1, 2 that actually were outside, okay, the standard deviations range. This is huge volatility. And what we see on this, it coming way down. Okay, so we still did see some patterns here. Now, if you'd like to know when reversals usually occur, I can kind of show you that as well. When things start to get exhausted. Now, for the most part, we had a big candle, we had a bigger candle, we have a bigger candle. So we have lots of selling off. Okay, this is just a wick. So didn't it get exhausted about right here? Well, it did. And we started to see some positive momentum. Now, right here, normally, probably people would start to get buy and get back into the market. And over the long term, they still would have made money. But, and this is over, let's see, June to now, okay, to current. So you still, if you have enough holding power, you can. But it would have been better to see a confirmation on this particular candle right here. These are called candles, by the way. And when you have a little thing that sticks out of them, they're called wicks, like on a candle. You're going to light them. All right, so right here, what we see is it touching down back to this -2 standard deviation. And it's kind of like the 38.2 that we saw in the Fibonacci retracement. And we're going to put that over this so that we can actually use a few indicators together. So I'm going to look for fib. I just typed in fib. We can look at auto retracement, but I think the spot and pivots, pivot points, when they show those, okay, and I've got those now on there. Okay, they're going to show you where things start to pivot. You still see some lines as far as that. And there's the Fibonacci pivots that we see on there. And they're showing other tight lines. You see this line? This is your Fibonacci retracement. And remember when we talked about Fibonacci, how it has over here, you see the prices that are at the 68.2 and the 38.2 and the midline, the 50. So the 50 is coming like this. So what are we saying? A downward slope in Ethereum at the moment. All right, there's one other indicator that I always like to use, and that's called either RSI divergence or the MACD divergence. And the MACD divergence, actually moving averages, actually show us on a new panel right here. And remember I told you when the 50-day crosses the 21-day, okay, when a higher goes above it, actually this is the 200-day, I'm sorry. So when the 50-day goes above a longer term 200-day moving average, you usually start to see rises in prices over a period of time. Now what happened is that this crossed right here, and what do we see? We saw a rise in price. And then what happened? It started to separate again. Now, usually when it comes back down is when we see, like right here, here's a perfect example of it. Okay, when it crosses below the 200-day average, it usually goes back down. Now, what do we use? Do we use one of these? No, we kind of look at all of them to see where the direction is that we want to go. And again, many of these things can be used for short-term trading, and they can be used over a long period of time. So if I want to see market direction of Ethereum, I can take a look at the 1 month. Okay. And over a period of time, you're seeing consistently what's happening. For the most part, it hits the +2 on the Bollinger bands and then retraces down to the -2. Okay. And if you're patient enough, it will go back up. So these are huge buying points and these are huge selling points. So when we talk about entries, you enter at the low band and you exit when it gets close to the top band. Now, what do we see right here? And let's give you a price on that one. Because it went up to, that's 46.87. We're still on Ethereum. Oh, yeah, we're on the weekly time band. So we'd have to go, oh, see, we're way away from where we should be. So right here, okay, is the upper band. And that's saying that's around as of currently 2268. That's a great sell point. Now, what do we say? These things start to close together. And we know the Ethereum merge is happening right now. And we're going to look at the SPY. And the SPY is the S&P 500. Doesn't matter which one we use. So we can see the direction of the overall market this way. And remember, this is long-term trading. So when I see this start to cross over, what do we see? We started to see these are what? Weekly averages starting to go up. So we had a big candle, a lot of movement, and it crossed the what? The midpoint. And then this is the Bollinger Bands, remember. And then we had a small candle. So it could have exhaustion. But remember, this is a week time frame. So we look at the next week, okay? And it went way up. Now it's starting to exhaust itself. And it did this in between these two bands. So what happened was it pulled back to the midline. And now we're seeing a trend start to go upwards. But that's why sometimes we put stop losses below this, because we're seeing a downward market. So we can see that quite clearly. I have this. Let's see if I can actually show you that one. Okay. Obviously, we have a downward market. And what am I doing? I'm placing, I was placing them all on the tops. So they're at the top of each one of these peaks. You can clearly see this market is going down. Now, when we look at MACD, okay, usually what are we seeing? This is starting to go up. So we're going to draw another line right over here. Now, what does this mean? This isn't necessarily good. All right, so this is an arrow. Okay, and we don't like arrows because arrows make the market go down. So according to this, in both trading strategies, we're looking at more pain coming along. Again, this is only for educational purposes. If we want to get some more direction as to what's happening in a shorter time spans, so we could go take back a look at the 1 day. And look, this is starting to move back. And what is this? I have to readjust my lines now. I could. All right. But what are we still seeing? A declining market. And what are we still seeing right here? It's starting to, there's our arrow again. So even on the 1 day, it's telling me this probably has more pain to go in the market. All right. If we want to see what's going to happen tomorrow, we can take a look at the 4 hour or the 2 hour, and we can kind of get some direction as to what's happening tomorrow. So what do? We had a, and this is, remember, a 4 hour chart. So this is basically all day. So we had we had an incline, and then we have some selling off in the market, and then we went back up. Now, how can you use this during the day? Well, didn't we go from the -2 to the +2? So that'd be great selling opportunity if you were a day trader. So I could have bought anywhere along this line right down here as I saw it declining. Now, we never had confirmation until we saw it over here, okay, start to go down. This told us it was going down. What do we see? It going down all the way consistently. So what am I entering? I'm trying to enter at a point that is touching this -2 line. And then what am I going to do? I'm going to put a stop loss or a sell, put a stop loss a little bit below this, okay, after it starts to rise all the way back up. So let's just say this says 407 on the SPY, that it did touch close to what? 412 today. So when it hits around here in this range, what we've seen, okay, we've seen a lot of support in this area, okay, and resistance. So at 406, I'd probably sell. And I would have bought at, let's just say I missed that one, 390 in that range, 391. And I would have sold at 406. So I would have made profit. All right. As always, I hope you find this helpful and useful. And please like and subscribe. Again, it's the only way that any influencers get paid. And to tell you the truth, I'm not even monetized yet.